Welcome to class again. Uh, since last week, we've been discussing the topic budgeting and budgetary control, and we've looked at the aspect of production budgets, cash budgets. We've looked at flex budgets. Tonight, we're going to look at flexible budgets. Flexible budgets. When we talk about flexible budgets, this is a type of budget that is prepared for different levels of activity. Take note of this, please. It's a type of budget that is prepared based on different levels of activity or capacity. It is a budget that can be adjusted to suit the prevailing situation at a particular point in time. Why do we have to come up with flexible budget? Flexible budget is important because budgeted costs and revenues change in line with what actual outputs or activity level. Unlike a fixed budget, what a flexible budget does is that it recognizes that costs behave differently when activity levels changes. For example, you can be producing at 50% activity level. The cost you will incur when you are producing at that level will vary when you are producing at 80% capacity level, because sometimes there's what we call economies of scale. If you buy in large quantity, there are certain discounts you can enjoy on cost, unlike when you are just producing on a small scale. So flexible budgets acknowledge the fact that cost changes with degree of activity. So if you are producing 20,000 units, the variable cost will be less compared to when you are producing 80,000 units. So flexible budget is a budget that is adjusted to suit different level of activity. So if you check the question I forwarded, you see levels of activity. It can be 20% activity level, 50% activity level, 60% activity level. So it shows that when you were planning, you planned based on 100%. But in reality, as at now, the present economic condition will not warrant you to produce at that level. So you need to adjust. So this flexible budget is necessary because output rarely equals the original planned level. You can make your plan today, and when you want to execute your plan, there can be deviation. So you adjust your budget to suit the prevailing condition at that particular point in time. So one thing with flexible budget is that it focuses on cost control. And this cost control will lead you to establishing meaningful variance, will make you to be able to come up with meaningful variance as you compare your actual with your standard, So in trying to solve questions on flexible budget, the concept of high-low method is very important. This high-low method is otherwise referred to as what? The range method. Range. When you talk about range in statistics, you're talking about trying to identify the highest and the lowest among sets of a given data. So high-low method, once you are given a question, you look, what is the highest output? What is the lowest output? What is the highest activity level? what is the lowest activity level? You compare. You look for the difference. So when preparing a flexible budget at different capacity or activity level, what you need first is to identify the highest activity level and the lowest activity level. So once you identify the highest level of activity, it can be in form of unit produced, it can be in form of machine hours. You also need to identify what the lowest level of activity. So once you identify these 2 points in the given information, you apply the concept of what? The high-low method. The concept of high-low method. And this high-low method, how do you come up about it? It is your change in total cost divided by change in activity. Your change high-low method is to range approach. The high-low method, it is used to determine the costs per unit or cost at 100%. So for you to determine to use your high-low method, it is your change in total costs divided by what? Your change in activity. Change in activity. And this change, they're talking about the highest and the lowest. What is the total cost? The value, the highest value of total cost in the question. What is the lowest value of total cost in the question? The difference between the two is the change we are referring to. In terms of activity, is it 40% activity, lowest activity? The difference between the two will give you the change in activity level. So when you divide your change in total cost by change in activity level, you will get your variable costs. You can get the cost per unit or the total cost in terms of 100%. So when you get your cost per unit or your cost for at 1% activity level, it will be much more easier to get it at 100%. If you get your value at 100%, it will be much more easier to get the value at other levels of activity at 40%, at 60%, and so on and so forth. So this concept of high-low method is a measure of change in total cost divided by change in activity level. Now, coming to this question that I forwarded early this morning, that Tokwe Ola Limited is currently producing at 40% capacity. It means we have the means to produce at 100%, but we are not working at full capacity currently. So we are only working at 40% capacity. Why? Because of the global economic meltdown. So the following data have been extracted from the company's record. And based on the company's record, we have 3 levels of production capacity that we can produce. We can produce at 30% capacity level. We can produce at 50% capacity level. We can produce at 75% capacity level. So based on this question, we have two sets of costs. We have direct materials, we have direct labor, we have direct expenses, we have production overhead, we have administrative and selling overhead, with their various values for the various capacity level of 30%, 50%, and 75%. I have a question at this point. Now, direct material, what form of cost is direct material? What form of cost is direct labor? What form of cost is direct expenses?
Variable cost.
Variable cost.
They they are all variable costs.
Fine, fine. Now, production overhead, administrative and selling overhead. What classification of costs is this?
The overhead costs.
Okay, overhead costs. Now,
In other
this,
words, mixed costs.
okay, fine.
They
Yeah,
may be fixed or variable.
to,
They are simply referred to mixed cost
okay,
because out of it we might derive the variable cost from it. We might also have the fixed overhead because the production, the factory production is simply referring to fixed cost, whereby administrative in some cases is variable cost. So in that
okay,
case, we are going to use the mixed cost to determine the fixed cost from the variable cost.
okay. All right. Yes, thank you very much for those contributions. Yes. So overhead costs, they are indirect costs. They are not costs that are traceable to the production process. So these overhead costs, they are costs that are incurred in the production process or in running a business that are not directly traceable to the outputs. Yes, they are not specific. They are not specific to each unit produced in an organization. So these overhead costs, they can be mixed costs, just as you have mentioned, sir. They can be mixed costs. There can be elements of variable. There can be elements of fixed in it. So if you look at that word, production overhead, it is not specific to either it is variable or fixed overhead. The administrative and selling overhead, likewise, they are not specific. They just use a a a word, a collective term for it. That is production overhead. It is now left to you to know, in this overhead, is there variable? Is there fixed? In admin and selling overhead, it is now left to you as a student to bring up an approach. How will I know the fraction of fixed in this overhead? How will I know the fraction of variable in this overhead? And that is where the concept of cost separation will also come in. The concept of cost separation will come in. And for you to be able to do that, based on this question, the concept of high-low method will also suffice in trying to solve this. Now, the question is asking us that we are required to prepare a flexible budget at 40% activity level, at 60% activity level, and 90% if markup is 40%. Assuming 100% capacity utilization is 100 units, 100,000 units, you are required to state the unit selling price at 40%, at 60%, and 90% capacity utilization. Explain the key limitations of your calculation in A and B above. So looking at this question, what are we going to do? Looking at this question, what will be the guide in trying to solve this question? First, once you see a question like this, you don't need anybody to tell you. Your mind should just go straight to what? High-low method. The question can vary. You can have more than this capacity level. You can have just 2. You can have just 30% and 50%. You should know you have to use high-low method. You can have even 4 columns. You should know you have to use high-low method. You don't need any, the question will not tell you, use this approach. So once you see percentage, or you see productions in units, 20,000 units, 50,000 units, 70,000 units, 80,000 units, in columns, in this order, you should go straight to using the high-low method. The question will not tell you use high-low method. It's you, based on understanding, you have to go straight to using the concept of high-low method. So once you see a question, that is why that question or that question I forwarded, it has been tested before. I think if you check the study pack, you see Basket Maths Nigeria Limited, something like that. It's a repeated question. So because I was not having time, I just quickly got that one and forward. So by the time we are through with the class, you can still, once you check both questions, you discover they are the same. But with this understanding, my objective in this class is to make you understand how to solve this. Then you go and solve that other one. The one in that Pathfinder, the other one I forwarded this morning. With this understanding, that is my objective for this class, and that is what I want to achieve. That with the knowledge you get in this class, you should be able to solve that other one. Now, to solve this question, that we are required to prepare flexible budget at 40%, 60%, 90%. For me to solve this question, I must know what my capacity is at 100%. It is when I can discover my capacity at 100% or at 1%, then I can now place 40% on my 100% capacity. I can now place 60% on my 100% capacity. I can now place 90% on my 100% capacity to know what will be the quantity to produce at each of these levels. But the first thing is, how will I know my capacity at 100%? I will need the concept of high-low method. The concept of high-low method. Based on my earlier explanation, I gave an expression on how to determine high-low method. What is the expression if you are writing? I put forth a write-up.
Changing the total
Change the total cost
by
over
changing
change in
activity.
activity level.
Fine. Now, in this question, we have various cost items. One, we have direct material. We need to determine the value of direct material at 100% or at 1%, whichever approach. But I prefer it in 100%, so that once I get my value in 100%, 40% of my 100% value will give me the cost element at 40%. So now, direct material. Let's look at direct material. The highest value of direct material is what? The highest value, 750 at 75%. The lowest is what?
300.
Fine. Our capacity level, the highest is what?
75.
And 30 is the lowest. Fine.
Yes, sir.
Going by the formula, solution. To get the value of direct material at 100%, to determine the value of direct material at 100%, we have it as what? Equal to the highest value of direct material, we said is what? 750, right?
Yes.
Minus the lowest value is what?
300.
The activity level, the highest is what?
75%.
Minus the lowest is what?
80%.
30%. When you use your calculator, 750 minus 300, you have what?
450.
450,000. 75% minus 30%, you have what?
45%.
When you divide 450 by 45%, you have what?
1,000.
Okay.
No. 1 million. 1,000. 1 million. 1 million.
1 million. It means the value of direct material at 100% will be what? Will be 1 million. So at 40%, what will be the value? If this is the value at 100%, at 40%, it will be what?
400,000.
400,000.
Very good. At 40%, direct material will be 400,000. At 60%, it will be what?
600,000.
600,000. At 90%, it will be what?
900,000.
Fine. 900,000. Any problem with this? Any question about this? Madam Esther, what is your question?
Good evening, sir.
Good evening.
Sir, please, at what level do we know that we're supposed to use high or low method?
You're just joining my class now.
Not just, but I missed that part. I was in class when you were saying it, but I missed what you said.
I say whenever we have range of activities, you have 40%, 60%, 90%, 1%, 10%, 15%, and you have arrays of activity. You need to look at the highest and the lowest between the values of activity given, or the cost or the unit of activity given. Then at that point, you don't need anybody to tell you we are going by what? High-low approach. We are going by high-low approach. Once you have it, you have columns of activities. You determine the highest from the activity, you determine the lowest from the activity. In terms of cost, likewise, you determine the lowest in terms of cost, the highest in terms of cost, based on the activity level, you use the high-low approach, otherwise known as the range approach. So if you've gotten these aspects of direct material, what will be our direct labor at 100% activity level? What will be our direct labor at 100% activity level?
1,500,000 minus 600,000.
So we're going to have it to determine the
So please, I have
value.
a question.
What is your question, ma'am?
Sorry, on the previous one, my network has been breaking. I didn't get how we got that 40%, 60%, 90%.
Okay.
I'm kind of lost.
All right. So I'm coming back there. Determine the value of direct labor at 100%. Now, at 100% for direct material, the value is what? 1 million. 1 million. Are you there? The value is. I want to know where is this noise coming from, please? If you are not the one asking questions, you can just mute yourself. So we have a pleasant class. So to determine the value of direct material at 100%, we use our high-low method to determine the value at 100%. Now, the highest value is 750, the lowest is 300. In terms of activity level, the highest is 75, the lowest is 30%. So when you do your mathematics, 750 less 300, you have 450, 75 less 30%, you have 45. 450 divided by 45%, you have 1 million. This is the value at what? At 100%. 1 million is the value of direct material at 100%. At 100%. So this 1 million at 100%, what will be 40% of 1 million? That is 40 over 100 multiplied by 1 million. You get what? Is that who asked the question? Is it Mary? I was not on this. I was on another platform while you were asking the question, so I didn't get your name. Okay, maybe the network have pulled you out again.
Yes, I'm back.
So I said at 100%, it's
From this
1 million.
40% equals to 400,000. 40% of
Okay.
what give us 400,000? Okay.
Is it clear now?
Yes, I understood. Thank you. Yes.
So if you've gotten this, can you help us with the direct labor? What are we going to do with direct labor? To get the value at 100%, then at the various percentage given in the question.
So the value at 100%
Okay,
is 2 million. That is 1.5 million minus 600,000 is 900,000 divided by 45%, 2 million.
Okay. 2 million. Fine. Yes. Madam Ola Christie, you can see your hand up.
Yes, sir. Good evening, sir.
Good evening.
Yes, sir. I want to have that because I can see that we use 40%, 60%, and 90%. Me, I thought we are solving question one, not question two. Or are we solving it together? But me, I was expecting 40%, 60%, and 90%.
Okay, which one is question one, ma?
Direct materials.
If you read the requirements, ma, you are required to prepare what? A flexible budget.
40, 60, and 90%.
Fine. These values given, we are not asked to prepare budget at 30%, 50%, 75%. But because these are the given data, we need to work back to get the values at what? At 100%. To be able to what? To plug in the values of 40, 60, and 90 from the 100% values given or derived. I don't know if that is fine.
All right, thank you, sir.
Yes, Madam Victoria.
Yes, sir. Well done, sir. I'm sorry, I just came in. I understand, but I don't know why we didn't use that 50%. Why?
Yes, based on the concept of high-low method, you look for the highest among arrays of giving data and the lowest. So the difference between the highest and the lowest is what you are considering based on the concept of high-low method, otherwise known as the range method.
High and low method.
Yes, ma'am.
Sir, does the question tell us to use high and low method, or we just assume?
The question will never tell you, ma'am. So once you see the given data and you see it you have different degrees of outputs, because it might not be in percentage, it can be in form of outputs. This 30% can be 30,000, 50 can be 50,000 units, 75 can be 75,000 units. Then you have the cost item under each. Then, and the capacity level can just be 30% and 50%. It can just be two values. It can be 5. It can be 6. So what you're just to do is to look for the highest and the lowest among the data and solve based on high-low method. So the question will not, if you look at this question, they will not tell you high-low method. So it is expected that as a management accountant, you are expected to know what to do per time. That is how the question will be framed.
Thank you, sir.
All right, ma'am. I can still see your hand up, ma'am. Madam Christie.
Okay, so you have answered my question. Thank you, sir.
You can bring it down so that once somebody else raises up their
Okay.
hand, I will know that it's a fresh hand.
All right, thank you so much.
So with respect to direct labor, to get the value of direct labor at 100%, what are we going to do? At 100% using the high-low approach at 100%. The highest value.
Okay.
for direct labor is what? 1.5. The lowest is what? 600,000.
600.
So we have it as 1,500,000 minus what? 600,000. So we have it as what? Divide by the activity level. The activity level, we still have it as what? 75% minus what? Minus 30%. 30%. So once you do this, the result will be what?
45%.
Yes. So we now have it as overall, it will be what?
900,000.
Okay, this will be 900,000, right?
Divided by 45%, which is
Yeah,
2 million naira.
45%.
2 million.
55%. So you have
2 million.
2 million.
you have it as 2 million. $2 million. So this is at 100%. Now, based on the question, at 40%, what will be the value of direct labor?
800,000.
800,000.
800,000.
At 40% multiplied by 200, that is 2 million now, be equal to what? 200,000. So at 60% activity level, it will be what?
1.2 million. 1.2 million.
1.
It will be 1.2. So at 90% activity level,
1.8.
1.8.
equal to what?
1.8.
1,800,000. Any question about this?
No.
Look, the next form of expense, direct expense we have is what?
Direct expenses.
3750.
We have direct expense.
375,000. About 150.
Can see. Let me see. Somebody raising. Yes, what is the question, ma?
I'm so sorry for bothering you, sir. So in our final figure, I thought we use 450,000 to divide 45%. So if I'm doing it like that, I did not get 1 million. So I want to is there any other way that people are doing it to get that 1 million? Because I thought 450,000, I will look for the 45%.
So when you do that, what do you have, ma?
I don't have 1 million. No.
And what is that result you have, ma?
You,
Oh, you will get a result. I want to pick it up from the results.
Okay, it's 205, 202, 500.
202, 500.
Yes, sir.
That is for this direct material.
Yes, sir.
Okay, no, you shouldn't get 202, 500. So on your calculator, when you press 450, when you press 450, divide by 0.45, what will you have?
That's what I'm doing. 450,000 times 0.45.
No,
Maybe it's the
divide
calculator.
by 0.45.
Okay. Divided by 0.45. Oh, God bless you, sir. Thank you, sir.
That's the budget. 40%.
All right. So
Mr. Top,
this is
Mr.
for direct.
Hello, sir.
Yes, I'm with you.
Sir, this 40%, 60%, and 90% is not giving the question. So if we use
It's giving. I've sent this question since you didn't read it, ma. See it, ma. It's giving. See it.
okay, yeah,
60%. I used to send questions so that I will read through, please. 60, 40%,
okay,
60%, 90%.
all right.
Madam Juliet, what is your question?
Okay, sorry, sir. I understand all you are doing, but from that question, that A, they say you are required to prepare a flexible budget at 40, 60, and 90. If markup is 40, I don't understand what they mean by if markup is 40. Please, sir.
We are coming there, ma. We are just still doing our workings.
Okay.
We are coming there. We are still here to prepare our budget. We are just solving the variables, the components of the budget.
Okay, sir.
We will present the budget in a professional way, in a table.
Okay,
so
sir.
it is when we prepare it in a table, then we will now come up with the issue of markup.
Okay, sir.
That you are required to prepare a flexible budget at 40%, 60%, and 90% if markup is 40%. So at that point, we'll ask ourselves, what is markup? And in what instance do you relate markup with? We'll ask ourselves that question so that the understanding will rest with us.
Okay,
so
sir.
we are still coming.
Thank you, sir.
So at direct labor, based on the question, at 40%, 60%, 90%, we've been able to determine what the direct labor will be. So we are now left with what? The direct expense. Direct expense. This is also a variable cost. It is clearly a variable cost. Because some students will ask you, how will you differentiate between variable and fixed cost? There are variable costs are costs that varies with the activity level. Fixed costs are always constant. And that is where, when we get to production overhead and admin overhead, we need to ask ourselves, this overhead, this O value, is it fixed or variable? At that point, we need to also show a working to answer that question. So direct expense is a variable cost. To determine the value of variable cost at 100%, what are we going to do? We're going to follow this same approach. We're going to follow this same approach. By this time, everybody should be able to solve this. To determine the value of direct expense, at 100%. So at 100%, it will be what? At 100%, it will be 375,000 less 150 divided by what? 0.45. So at 100%, from the question, it will be 375 less what? Less 150,000 divided by what? Divide by 75% minus what? minus 30%. So when we do this, the result will be what?
500,000.
500,000.
225 divided by 0.45.
$500,000.
Okay.
500,000. So at 40, it will be what?
200,000.
It will be 200,000. At 60%,
300,000.
if you can see, if you add 40 plus 60% to give you the value as what? At 100. So at 90%,
450,000.
450,000. Hope this is clear.
Yes, sir.
Now, fine. Let's take it further. We have the issue of production overhead. This production overhead, it is not directly stated if this is variable overhead, if this is what? If this is fixed overhead. So we need to determine the portion that is variable and the portion that is what? That is fixed. Now, what is your total cost? The equation of total cost is a makeup of what? Of fixed cost plus what? Plus variable cost. So this production overhead, likewise, we need to apply the concept of high-low method to determine the value of the variable cost at 100%, or the value of production overhead at 100%. At 100%. So when we determine the value of production overhead at 100%, that value will be the total cost at that level. So based on the total cost, if we are applying 75%, we can apply 75% on the total cost to determine what? To determine our variable cost. We can apply 30% on the total cost to determine our variable cost. Please follow this explanation. So when you determine your variable cost, either at any activity level, either at 75% or 30%, the difference between your total cost and your variable cost will give you what? Your fixed cost. Your fixed cost. Now, the total cost at 75% will be what? The total production overhead at 75% will be what? 400. Will be 400,000. The total at 30%, the total cost of production overhead will be what? 220.
220.
Will be 220. But the question now is, what will be the variable cost? The variable cost at 100%. We must determine that. So once we know our variable cost at 100%, then as the activity varies, we can now look for the percentage on the total variable cost. Let's show it. Please follow so that we'll get the discussion well. So we'll look at cost separation. Still using the high-low method, cost separation, because the overhead is not directly stated if it is variable or fixed. So we look at the issue of cost separation, starting with the production overhead. Starting with what? The production overhead. Now, we want to determine the total variable cost based on production overhead. Total variable cost based on production overhead using the high-low method. Total variable cost using high-low method. Using high-low method. Now, based on this, using the high-low method,
just definitely, ma.
using the high-low method, from the question, go back to the question. The total cost, the highest at the production overhead is what? Is 400,000. The lowest is what? 220. So we still use this to determine that. So we have it as 400,000 minus what? Minus 220,000. Divide by what? Total variable costs. Let me define it well. At 100%. At 100%. So the activity levels, we have them as what? 75% minus what? The lowest, 30%. When you simplify this, what will be your result?
100,000. 400,000.
Fine. So your result will be what? 400,000. This is your variable cost at 100%. Your variable cost at 100%. Now, if this is your variable cost at 100%, what will be your variable cost? What will be your variable cost at 40%, at 60%, at 90%? That is 1. Just hold it there.
Sir, I don't understand what you are saying, please.
This value of 400,000, what is the value? This value of 400,000 is your total variable cost at 100%, right?
Okay. But we were talking of the mix. We were saying that it is mixed. It contains both variable and the fixed cost. So how do we now know that the 400,000 is variable? And what portion is going to be the
400,000 is our total variable cost at 100%.
okay, the fixed income?
Now, to determine your fixed cost, your fixed cost will be what? Total cost minus variable cost. Now, going to the question, based on the highest activity level, your total cost at 75% activity level based on production overhead is what?
It's 400,000.
Fine. Follow. Your total costs, let me make it clear, at 75% determination of fixed costs. No, fixed costs will always be constant at any activity level. So we'll test for that. Determination of fixed cost. At 75% activity level. Now, your total cost at 75% based on production overhead is what? 400,000.
400,000.
Fine. 400,000. Let me make it fixed costs equal to 400,000. Now, at 75%, what will be your variable cost? At 75%, what will be your variable cost in terms of production overhead? If this is your 100% variable cost, what will be the 75% of that?
300,000.
75% of 400,000.
300,000.
Fixed costs will be equal to 400,000 minus what? 300,000. Your fixed cost will be what?
100,000.
Fixed cost will be 100,000. Any question about this? Because you will solve at 30% for me now to know if we are going to get same result of 100,000 as fixed cost. Yes, because fixed cost will always be constant. So you will now apply determination of fixed cost at 30%. Determination of fixed cost percent at 30%. At 30%. Slide. So at 30%, let me see. All right. I believe you put down that write-up. I don't know if you put it down. I don't know what I pressed on my system. Let me just write it again. Determination of fixed cost at 75%. At 75%, and I said fixed cost is equal to the fixed cost at 75% is based on production overhead is 400,000.
100,000.
Minus 75% of the variable, the total variable cost at 100%, which is 400. It's coincidence. So when you are solving for 30% activity level, you will see what will happen. So this will be 400,000 minus what? 300,000. The fixed costs, I said, will be what? 100. So going to 30%, 30%.
Fixed cost is 280,000.
Fixed cost is 280,000. Your total cost based on production overhead at 30% is what? 220. 220.
Fixed cost is 100,000 still, sir.
Fine.
Yes.
your total production overhead, total cost of production overhead at 30% activity level is 220.
It's 220. So 220 minus 120.
Thank you, sir.
So
Thank you, sir.
yes, so your total variable cost is what? 400 at 100% is 400,000. So 30% of 400,000 we give you what?
120, sir.
Okay, fine, 120. So 220 minus 120 will give us what?
100,000.
It's 100,000.
Fine.
100,000.
Let's show it, because I want everybody to get it. Let's show it. Because it's not something, if it is something that is difficult that you cannot get, I will know. But this is something that everybody you can understand it. So there is no hide and seek in this game. It's what you can understand. Cost separation. Cost separation for production overhead at 30%. At 30%. Now, we said our fixed costs will be total costs minus what? Minus variable costs. We want to determine our fixed costs at 30%. At 30%, your total cost is what? Based on production overhead. This is it, 220,000.
220,000.
220,000. 220,000 minus our variable cost. We solved by determining variable cost at 100%, because it is variable cost that will always vary. So to save ourselves stress, the variable cost at 100% is 400,000. So at 30%, what will be your variable cost? It will be 30% of what? Of 400,000.
130,000.
So your fixed cost will now be equal to what? 220,000. So it's total cost minus the percentage of variable cost in the overall in 100. And this will give us what?
120,000.
120,000. So the fixed cost will now be what?
100,000.
100,000, which is same when we solve at what? At 75%. At 75%. Is this clear, please?
No, sir.
Who said no?
It's me, sir.
Okay, where is it that is not clear, ma? Let me
This
know where.
concept, this cost separation, I didn't get it at all, but I got others.
Okay. We talked about production overhead. We said production overhead is a mixed cost. It's not there is no specific definition of whether it is variable overhead or fixed overhead. So
Yes, sir.
in order to know the composition of the production overhead, we will still determine our variable portion of it. And in determining the variable portion of that production overhead, we need to know what is the 100% of the variable cost.
Mhm.
What is the 100% of the variable cost? Because the variable cost, why we are using high-low method for that, is because it is variable cost that will vary based on the percentage. The fixed cost will remain the same.
The same.
So we now said that from the question, the total production overhead as at 75% is what?
400.
Yes, and the least production overhead is what?
220.
So we still apply the high-low method to determine the variable cost at 100%. At 100%. So we now search 400 minus 220 divided by what? 45%. That result that we determine is the total variable cost at 100% using the high-low method. So now we need to go further to determine in that 400, in that production overhead of 400,000 at 75% activity level.
Yes.
At 75% activity level. That 400,000, what is the portion of fixed cost in it? What is the portion of fixed cost in it?
Okay.
So that 400,000, take note, it is the total cost of production overhead at that level.
Yes.
So in that 400,000, what is the portion of what? Of fixed cost? What is the portion of what? Of variable cost?
Okay.
So we now come up with this formula. Fixed cost. Let me go back there. Fixed cost is equal to what? Total cost minus variable cost.
Variable cost.
We give you fixed cost. So because fixed cost plus variable cost is total cost. So because we have a clue to our variable cost, we have a clue because we already have 100% of our variable cost, which is what? 400,000.
400,000.
So at 75% activity level, man, what will be the value of variable cost at 75%? If at 100% it is 400,000. So the value of variable cost will be what? 75% of 400,000. We give you what?
300,000.
So your total cost at 75% based on production overhead is what, man?
400,000.
So 400,000, which is your total cost, minus the value of your variable cost at that activity level, which is 300,000. We give you what?
100,000.
Yes. So, ma, based on this, can you now explain if you are to work based on 30% activity level, what will be the expression?
For me, it should be fixed cost should be 400,000.
No.
Minus.
Take note, at 30% activity level.
Yes, the 100% is 400,000.
For variable costs.
For variable costs.
Yes.
Okay. 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 That means it should be fixed cost should be 220,000.
No, that 220,000 is your total cost of production overhead at that activity level.
Oh, okay. Oh.
At 30%. Yes, Madam Victoria.
Yes, sir. Since we are having the same value, both variable and fixed costs, is it possible for us to ignore the separation of costs and just pick and just assume the production overhead is variable?
No, that says we are having same
value for
of
both
400,000.
Of 100,000. When we calculated for fixed cost, we got 100,000. When we calculated for variable cost at 75%,
yes, ma'am.
we still got 100,000.
Yes, ma'am.
That means variable cost is 100 and fixed cost is 100. Am I right?
No, ma.
Okay. Variable cost at 75% is 100,000.
No, ma.
Okay,
That
fixed cost.
100,000 is start cost, is fixed cost, yes. States, ma.
Okay, okay. Okay. Thank you.
So what we are trying to show is that fixed costs will always remain constant at every activity level. So at 75% activity level, your fixed cost is what? 100. At 30% activity level, your fixed cost is what? Is 100. That irrespective of the activity level you are working on, the fixed cost should be constant. Should be constant. Should be constant. It is the variable cost that will vary based on the percentage of activity level that you are working on.
Sir, if I should put this fixed cost, this 30% fixed cost, should I say fixed cost equals to 200 and okay, 220. Okay. That's what I said before now.
So your fixed cost is now what, man?
It's 100. I said fixed cost equals to 220 minus bracket 30% all of multiplied by 400, which is our 100%.
Okay, very good.
Production overhead. Thank you, sir.
Okay, fine. So now, if we are all there, can we now solve for admin and selling overhead?
Hello, sir. Sorry, I raised up my hand, sir.
I didn't see your answer. Okay, I can see 1 plus. Okay, I can see now. All right, so what is your question, sir?
Sir, please, where you calculated the total cost, variable cost to be 400,000.
Yes, sir.
Please, can you take us to that page, please?
Yes, this is it, sir. Any questions, sir? Hello, sir. Please, can you hear me, please?
Yes, sir.
All right, I think.
Yes, sir.
Okay, I thought he wanted to ask a question. So can you solve for admin and selling overhead? Let's determine the variable and the fixed elements. Can we solve for that?
Yes, sir. Let's try.
Sir, please, I'm not seeing your screen.
Can you see it now?
No. Yes.
Hello, sir.
I'm with you, sir.
Sorry, it was the network issue, sir.
All right, sir.
The page that you work for the total variable cost,
yes, sir,
arrive at 400,000 is the area that I want to get more clarification, sir, please.
Yes, sir. Yes, that's 400,000. That variable
yes,
cost. Sorry,
the
I'm
400.
not. Yes, the 400,000. Yes, the 400,000. Yes. We adopt that approach of high-low method regarding the
Yes, sir.
determination of 400,000, because it is variable cost that varies based on activity level, based on the percentage. So we need to determine the 100% of variable cost. The 400,000 is not 100% of production overhead, because the component of the production overhead is both fixed and variable. So we use the approach of high-low method to get just for the total variable cost at 100% activity level. So at that 100% activity level, we can now place the percentage of what? Get the percentage of 60% of our variable costs at 60% activity level. We can get 40% of our variable costs at 40% activity level. We can get 90% variable cost at that 90% activity level. So I know the question that is coming to your mind is, but it is stated that this is production overhead. Why are we now using 400 as a whole and 220 as a whole? The concept is the variable varies, and that is why we are not determining our fixed cost in that approach. And that is why we are now determining our fixed cost based on the fact that the total cost of overhead at 30% is 220, less the variable element at 30% activity level. At 75%, the total cost of production overhead at 75% is what? Is 400,000. 400,000. What will be your variable cost at 75%? If your total variable cost at 100% is 400, it will be 75% of 400,000. That will give us the variable cost at that activity level. So that is why we use high-low method to determine the overall variable cost. And we are not using high-low method to determine what? Our fixed cost in that production overhead, because fixed cost is constant. It does not change. Percentage. It does not change based on percentage. Sorry, some people asked me to bring this slide here. That is why I didn't take it back to where the workings are. Yes. So I don't know if it is clear, sir.
It's clear, sir. Thank you.
Yes. Because fixed cost will not change based on percentage. It will remain constant. So
thank you, sir.
So to solve for admin and selling, okay, I can see, yes, Madam Juliet, fixed cost 150, software 150, and then fixed cost is 150, fine. So that is the fixed cost at that level, at admin and selling. It will be constant at every level. It will be constant at every level. What is our total variable cost at that point? Okay, yes, Madam Odoi, 150, yes. The total variable cost is what?
You don't even want to say
150.
Okay, you said 450?
Is it 150 or 300?
150,000.
Okay, 150,000.
300,000.
Sir?
I'm just asking the total variable cost based on from the admin and selling.
300,000.
Okay, fine.
Total cost is
300,000.
Total variable cost is 150.
Okay, fine. Fine. Yes. So I believe we're on the same page, everybody.
Like somebody is saying 150. Some people are saying 300.
150
Yeah,
is
total
for
cost is 300.
150 is fees costs.
yes. 150 is fees
At
cost.
what
Fees
level?
cost is 150.
At what level? Is it at
At all
75%.
At all level.
This course is constant at all levels, 75 and 30.
Me, I'm lost.
You don't need to be lost, ma. What did you solve, ma? Tell me what you solved. Tell me, what have you solved, ma? Tell us. We ask everybody to solve for admin and selling.
So what I did was that I got the total variable cost 300,000.
Okay.
Then I now come down, fixed cost at 75%. I said
Yes.
300,000 minus 300,000 minus. Maybe I made a mistake. Minus 75% of 375,000.
You juxtapose it.
You exchange it.
Ma?
Your fixed cost is constant, so you are using 300,000 throughout.
Sir, please, can you do the working?
Oh, voila.
I got 152.
Okay. Let's show it. But I actually expect everybody to be able to solve it by now.
So it's confusing. I don't know what happened.
That 375 is your total cost. Because we don't have time. So I expect us to be catching it.
Thank you, sir.
To be catching this.
Thank you, sir.
So to determine the value of direct, I no problem, and thank God. So okay.
225.
So, Madam Anna, you said we should solve it.
Yes, sir.
I will just solve one aspect and you. So, administrative and selling overhead.
150.
I'm taking my time here because this is where the work is. Yes, every other thing is just administrative and selling overheads. Once you can get this, you are very good. So administrative and selling overheads. Now, to get your total variable cost, at 100%, it will be what? Using your high-low method. It will be what?
375 minus 240.
Madam Anna, sir, allow Madam Anna to give me my figures. Give me the figures.
375,000 minus 240.
Yes. What next?
We have 135,000 over 45%.
So you said we have what?
135.
If you give me wrong figure, you are my teacher. So I'm following you. So when you do this, what will be the result? I don't know if you are correct too. So just tell me now.
5 minus 240.
Everybody, sorry, I know some of you are in a haste to see the next level, but let's be patient a little. Yes. Yes. Very fast.
So I have here 60,750.
That is serious.
300,000.
So I've gotten it though. The 2 is 150. Thank you, sir.
Congratulations. Congratulations, ma. Madam Anna, you are not pressing your calculator. Oh, nobody is disturbing you there.
I'm pressing it though.
So it's your response that will make me know how to.
Okay.
Yeah.
135 divided by
What's the code?
0.45.
0.45.
So that's for the dealers who are not
Okay, 300,000, sir.
Oh, 300,000.
Okay. Oh my.
So are you fine now?
Yes, I'm fine.
So we can move on.
Yes. Thank you
You
very
can
much.
get your fees. All right, fine. Okay, fine. So now we need to move to the business, what they want us to do. These are workings that will form our table. So we need to prepare our flexible budget. Our flexible budget at 40%, 60%, and 90%. We need to come up with the budget. So based on what have been presented to us, we'll draw up a budget. That is, you come up with the heading. That's what? The name is what? Topeola Limited. Flexible budget.
Please, sir, can I ask a question?
Ask, please.
Hello, sir.
I said ask, ma.
Okay, sir. So my question is that now, now we are working on the variable cost at 75%. Okay, total variable cost, we have gotten it. Then we now got the fixed cost at 75% and 30%. So what about the 50% fixed cost?
The 50%, if you work it, you also get 150, but we are not concerned about that. We've established that the fixed cost, you can work it, you can try it. But what we want to establish is that fixed cost will always be constant. Yes. But once you try it, you get same 150.
Thank you, sir.
Yes, ma'am. So we come up with our budget. Well, for you to come up with the budget, those workings are very key. So we have 40%. We have what? 60%. And we have what? 90%. That is what the question wants us to do. The question gave us budget for 30%, 50%, and 75%. But they are now asking us to solve for 40%, 60%, and 90%. So based on our computation, the material, the value of material at 40% will be what? At 40%. Check your book if you are writing.
400,000.
At 60%, it will be what?
600,000.
Okay, don't worry. You'll soon go and eat. At 90%, it will be what?
900,000.
Fine. Your labor, the value of labor at 40% is what?
800,000.
At 60% is what?
1.2 million.
At 90% is what?
1.8 million.
What next? Our
Direct expenses.
Direct expenses.
direct expense. Direct expense. At 40% is what?
200,000.
200,000.
At 60% is what?
300,000.
At 90% is what?
450,000.
450,000.
In manufacturing accounts, when you add all direct expenses together, what will you derive?
Prime cost.
Very good. Prime cost.
Prime cost.
So if you want to show your understanding the more, you can just add these three variables together and come up with a total and term it as what? Prime cost. That is, if you want to do that, there is no crime in not doing that. So when you add everything, 400 plus 800 plus 200,000, you have what? 1,400,000. And you add 600 plus 1.2 plus 300, you have what?
2.1.
And when you add 900 plus 1.8 plus 450, you have what?
3.150.
3,150. Now, our variable elements, our variable production overhead, the variable production overhead for, variable production overhead at 40% will be what? I'm supposed to show it as part of my workings, but I didn't show it. So variable production is what?
Please, I'll show it though.
150%. 60,000 rather.
160,000.
Eh?
At 60%, it will be what?
240,000.
Okay.
Yes. So we are not going
90%.
to remove the fixed cost in 40%.
Sorry, I didn't get your question.
I'm asking, are we not going to remove the fixed cost element out of the 40%?
No. Let me go back to the issue here. Now, at 40%, this is your variable cost is what? For production overhead, your total variable cost is what? See it.
300, 400.
400. Those figures you are giving to me, 40% of 400,000 out of this total variable cost is what?
Is 160,000.
160. 60% of this 400,000 is what? 240.
240, yes.
90% of this 400,000 is what? Is 360. Now, when we now come to the portion of fixed cost, what will be your fixed cost based on production overhead?
100,000.
100,000. Isn't it?
Yes.
To be 100,000 all true. So what is your question now?
So I was thinking we were supposed to remove 100,000 from 160, then the 60,000 will be our variable cost.
No.
Okay.
This is your total variable cost already. So what is the fragment of 40% out of this? You understand? So
okay.
And that is why when we and see activity level, 220 minus 120. So when you add plus, I don't know if you get that. So your variable production overhead at 90% will be what? 360. If you want to apply the concept of marginal costing, if you want, when you add all your variable costs together in terms of production, you get contribution, you get marginal production cost, rather marginal production cost. So which other variable costs do we have? Selling and admin. Selling and admin. What will be the variable cost at 40% activity level? At 40% activity level, this is the total variable cost of admin and selling overhead. So 30%, 40% of this will give you what?
120,000.
120,000.
120,000. Then 60% of that 300,000 will give us what? 60%.
180,000.
180, and 90% will give you what?
270.
270,000.
270,000. 270,000. So we can move further by showing now fixed cost based on production overhead from the workings. Your fixed cost is what?
100,000.
100,000 is a constant value. 100,000. Does anybody want to ask why are we having 100,000 all through? You want to ask? Is a fixed cost. Now, your admin and selling fixed element is what?
150,000.
150,000.
So it's 150,000 all through. 150,000 all through. Your total cost will now be what? What will be your total cost? At 40% activity level, it will be what?
530,000.
$1,930,000.
Total cost.
550,000. 30,000.
It's 3,330,000.
The next one, 2,770,000. 70,000. Three
4,020,000.
60,000.
Please, I'm not seeing your screen. Thank you, sir.
Okay. What is your question, ma?
All right, sir. Selling and administrative expenses, we have
Can you hear me, ma? I
120.
can see your hand up. What is the question?
Yes, yes, sir. Hello, sir. Are you there, sir? Hello, can you hear me,
Yes,
sir?
I can hear you, ma.
Okay. Yes, sir. And my
Yes, I
question
can hear
goes
you.
to the administrative and selling expenses. We have one administrative and selling expenses as 120, 180, and 270, which is a percentage of our variable cost. And the following one is our fixed cost of 100,000. So the next one is administrative and selling expenses. So I'm not clear about that. Does that mean that we have fees, administrative and selling expenses?
Yes, before now, we define overhead as cost. Element. Overhead is not one.
Sir, I cannot hear you.
Once the overhead is stated, is not stated variable, is not stated fixed overhead, it's just stated production overhead. In that overhead value, the components can be variable or fixed. In this question, they didn't tell you that the production overhead is variable. They didn't tell you that the production overhead is what? Is fixed. And that is why we need to do those workings of cost separation to identify the portion of the variable of the production overhead that is variable, the portion of the production overhead that is fixed. And we did same for admin and selling. If you check the question, it was stated admin and selling overhead, not directly variable overhead, not directly fixed overhead. And that is why we need to show that working of cost separation, that in this overhead, what portion belongs to what? To variable, what portion belongs to what? To fixed.
Please. Okay. All right, sir.
So if
Not
you look
this
at
way,
the Amen. So if you look at to further buttress what I'm saying, the variable production overhead, the fixed production overhead will give you the total overhead at that activity level of 40%, which is 160 plus 100 to be 260. That will be the total production overhead at that activity level. At 60%, it will be 240 plus 100 to give you the overall. At 60% to be 340. And at 90%, variable production overhead of 360 plus the 100 to give you the total overhead, production overhead at that level. So your total cost, I believe our result is the answers are correct. The total cost at various activity level. Hope the answers are correct. If yes, let's go back to the question. This is one level.
Yes, sir.
This is one. So going back to the question, you are required to prepare a flexible budget at 40%, 60%, and 90%. If markup is 40%, if markup is 40%, if markup is 40%. My question now is, what is markup? For those of you doing FR, some of you have passed FR here. You are happy. So what is markup? Don't go and put it in AI and tell me AI this thing. Because some people are very fast. They just go and type it and begin to tell me what
Markup
AI is
is
telling them.
related to cost.
Yes, markup is related to cost.
Why
Markup
margin
is
is
related to cost.
sales?
Margin is related to sales. Margin is related to sales. So markup is the percentage added what to the cost of a product to determine its selling price. The question is saying you are required to prepare a flexible budget at 40%, 60%, and 90% if markup is 40%. If markup is 40%. In this budget, you've known your total cost. Now, for you to know your selling price or your expected revenue, what will you do? If markup is the percentage added to the cost of a product to determine the selling price, for us to determine our selling price from what we've shown in class, what will be your sales revenue at what? At 40%. Why are we adding markup? Markup is the portion that will make up our profit. And that is when you want to determine markup as a form of formula, it will be your profit all over cost multiplied by 100. So for you to know your selling price, what will be the margin that you add to your cost to come up with an appropriate selling price where you'll be able to make profit? So going back to what we've solved, we have our total costs at 40% activity level to be what? Our total cost is what? At 40% activity level.
1,930,000.
So if markup will be applied on cost to determine your revenue, what will be the markup of 40% on 1,930,000?
772,000.
So the markup of 40% on 1,930,000 will be 772. So your markup plus your cost will give you what?
Revenue.
Fine, to give you your sales revenue. Hope we are not speaking in tongues here.
So I did not get it very well. Please recap.
Yes, I'm about to even ask if you are still in class, Madam Juliet.
Yeah.
So, Madam Juliet, at 40%, our total cost is what?
At 40%.
Our total cost is what?
Okay, I'm not seeing the down aspect of it. Sorry, sir. The table.
Our
Okay.
total cost is what?
1,930,000.
So what is the definition of markup?
According to what you explained, is the cost, but I didn't understand it.
Markup is what you need to add on your cost to determine how much you are to sell the goods in order for you to make profit. So markup is the profit element that will be added to the cost to come up with a revenue figure. Is that clear, ma'am?
Okay.
So if you have a cost of a good to be 20 naira, ma'am, that is the cost to you. You incur overall cost of 20 naira to produce a good. Now, for you to make a profit, you can set a margin for yourself, a markup for yourself. that on this 20 naira, I will add a markup of 40%. So 40% of 20 will give you what?
Now,
So when you add the result to 20 naira, that will be the sell price.
okay.
So
Okay.
we said markup is the percentage that is added to the cost of a product to determine its selling price. So from the question, the markup is what? From the question, the markup
is 40%.
Fine. So at 40%, what is your total cost?
Of 193 772 naira.
Fine. When you add that 772 to 1,920,000, your expected revenue is what you will get.
Okay. 2,702,000.
Fine. That will be your sales revenue, what you expect to get.
Okay, I understood very well. Thank you, sir.
So markup now. Markup at 40%. Markup at 40% on 1,930,000 will give us what? 772. Markup at 60% on the total cost of 2,770,000 will give us what?
1,108,000. 1,108,000.
So markup at 90% on the total cost of 4,030,000 naira will give us what?
1,612,000.
So what will now be your revenue, your total revenue at each point?
At 90% is 5,642,000.
Okay, 5,642,000.
642,000.
So at 60%,
3,878,000.
and at 40%,
2,702,000.
702,000. This is the part A.
Wow.
This is the part A. Hope this is interesting, right? This
Yes,
is
sir.
interesting.
Very
Yes,
interesting, sir. Thank you. Sir,
Very
please,
interesting.
please, sir.
Sorry, sir.
Hello, sir.
I don't
I'm
understand
with
how
you, sir.
you're getting this markup figure, sir.
Sir, please, the area that I want to get little clarification is that of admin and selling, that 150. What I'm getting there is a little bit different, sir. So I don't know, please, if you can
Madam,
show me
please
briefly.
can you mute yourself? All right, I will show
Okay.
you, sir.
Thank you, sir.
Sir, this admin and selling of 150. This is the fixed element in the total admin overhead cost at 40%. The total admin overhead cost at 40% is 120 plus 150. So based on our computation here, sir, based on our computation at this point, okay, you are people that solve it. You gave me the figure of 150. So this is your variable cost. your total variable cost. So your fixed cost for admin and selling will be what? Your total cost of admin and selling minus what? Your variable cost. So at 75%, what will be your fixed cost? At 75%, your total cost in terms of admin overhead will be what? 375, right?
Okay.
Minus what? 75% of what? Of 300,000. So can you plug this in your calculator? What are you going to have?
I've gotten the area that I got it wrong now.
Okay, sir.
Yes. It's just that 375, I use 300,000 based on the fact that we have total cost. I was referring to total variable cost.
Okay, sir. So based on the question, the A part, this is what they want us to do. But my major concern is on those preliminary parts we saw. You need to still go over it again and let the understanding read to you. That is very important, because if you go back to the question you are going to solve, that question you are going to solve have some additional information. But I'm not so keen about the additional information for now. Yes, I'm concerned about your understanding about how to apply the high-low method in solving that question. The additional information is nothing too big, it's not something serious. Yes, but you need to understand and be able to interpret. So that is that for the A part. For the B part, all right, sir. I can hear you, sir.
Please, the macro figures that you got there.
Okay, all right, sir. Sorry, you raised that question before now. Yes. So the markup figure, sir. 40% of 1,930,000. Can you punch that on your calculator, sir? 1,930,000 multiplied by 40%. What do you have, sir? Are you there, sir? Hello, are you there?
I have 772,000.
Yes, sir.
Fine, 772. So we said markup is on what? Is on costs. Your total cost is what? 1,930,000. So if you apply your 40% on this total cost, what will be your markup? 772. The expectation is that when you sell your goods, you should be able to make a profit of what? 772,000. When you, after removing your costs from the total revenue. So your sales minus your total costs should give you a profit of 772, which is a percentage you've placed on your cost. So for 60%, it will be what? 40% of what? 2,770,000. You get what, sir?
I will get 1,650,000.
So you do same. 40% of 4,030,000 for at 90% activity level.
Thank you, sir. I think I got it.
All right.
Thank you so much.
So for the B parts, assuming 100% capacity utilization. This is a different scenario. So when trying to solve question, you must know when the question are linked to the previous, and you must know when the question is standing on its own. So the B, that assuming 100% capacity utilization is 100 units. That is, if you are producing at the full capacity, which is 100%, the number of units you will produce is what? 100 units. Is 100 units.
100,000.
100,000 units. Fine. So you are required to state the unit selling price. The unit selling price. The unit selling price at 40%, at 60%, and 90% capacity utilization. So if the maximum production capacity is 100%, 100,000 units, at 1%, what will be the unit? At 1%, how many units will you produce? At 1%.
1,000. 1,000 units.
1,000.
1,000 units.
Fine, 1,000 units. So at 40%, how many units?
40,000 units.
40,000.
At 60%, how many units?
60,000.
60,000 units.
At 90%, how many units?
90,000.
90,000 units.
Fine. Let's go back to the question. Assuming 100% capacity utilization is 100,000 units, you are required to state the unit selling price. It means at 40%, what will be the price of 1 unit? At 60%, what will be the price of 1 unit? At 90%, what will be the price of 1 unit? So, based on what we've solved before, what is your revenue at 40%? What is your revenue yourself?
2,702,000.
Fine. So at 40%, if your 100% capacity is 100 units, and you've been able to discover that 40% of 100,000 units is what? 40,000 units, right?
Yes.
40,000 units. So if your sales revenue at 40,000, very good, very good. So if your sales revenue is 2,702,000 and you produce 40,000 units, the cost of 1 unit will be what? This sales revenue divided by 40,000 units.
By 40.
67.55, approximately 68 naira.
Fine. At 60%, if you produce 60,000 units and your sales is what? 3,878,000. What will be the cost of 1 unit?
64.63.
Fine. At 90%, if your sales revenue is 5,642,000 and you are producing 90,000 units, the cost of 1 unit will be what?
62.6869.
Fine.
Approximately.
Let's So let me show it. That is B. Let me write story. So if
You cannot see your screen, sir.
if the maximum production,
So I cannot see your screen.
you see it. Oh,
Okay.
some persons are. If the maximum, can you see it now?
Yes, sir.
All right, fine.
No.
So if the
Cannot see
maximum,
from my end though.
Log out and log in again.
if the maximum production capacity is 100,000 units, then 1% activity level will be what? Is 1,000 units. So 40% level will be what? Will be 40,000 units. 40,000 units. How are we going to get that? It will be what? Your 100,000 multiplied by what? 40%, right? Then 60% activity level will be what? Will be 60,000 units. That is 60,000 units. And 90% will be what? Is 90,000 units. 90,000 units. So you can now show it that at 40% activity level, 40% activity level, it will be what? That is 2 million. That is based on our sales, 2,702,000 divided by what?
40,000.
40,000. Your selling price per unit will now be what?
67.6.
So this will be what? 67.55. And at 60% activity level, it will be what?
3878,000 divided by 60,000.
And this will give us what?
64.63.
And at 90%, it will be what?
5,642,000 divided by 90,000.
And this will give us
62.69.
this is what the B part wants you to do. Any question about this? So for the C part, you are going to tell me what you think you should write there. Explain the key limitations of your calculations in A and B. So what are some real life scenarios that you think will counter what we've done. Yes, you need to think, will the price remain constant? Is it true? Will the price remain constant? These are our forecasts, these are our budgets.
Cannot.
Will it be accurate? You understand? This is a forecast. There are certain instances where you buy goods in bulk and you get discounts. Yes. So you think in that light, yes, and right. So this is an open-ended question whereby it is the quality of what you write that will make the examiner to give you the mark. So it's an open-ended question. You can come up with points as you can come up with. Inflation can affect the price because these budgets will be prepared now. Before the execution, certain economic factor might have set in and affect what you've put in, what you've prepared. And the forecast might not be accurate. You understand? And these are the variable cost is assumed to remain, to vary, yes. And the assumption that fixed cost remains constant. Some fixed costs might change over time. Yes. Some of these fixed costs might change, especially as it's associated with overhead. It might change. So it might not be fixed as it is being assumed in the computation. So these are some of the assumptions that or limitations that we can come up with as it relates to the solution. As it relates to the solution. So it's an open-ended question at this point. So that's what the question wants you to do. So let me go to the last slide as requested. So based on this, the other question I forwarded to the platform. Let me check it. Let me check the question. The other question, let me go and assess it. The other question we forwarded to the platform. Let's see. Is anybody on the group? You can. What is the heading?
Ezenwa.
Ezenwa. Okay, fine. Let me check for Ezenwa. I want to highlight some things in the question. Let's go and assess the question.
So please, this question that we just solved, which year and which number is it?
No, this one is not in the Pathfinder.
Okay.
So if you look at Ezenwa Nigeria Limited, you see two columns. You see production in units. Let me change my slide. I think I have it now. You see production of 80,000 units, production of 160,000 units. In this question, what are you going to do? This is given to you. The question is now requesting you to do what? Prepare set of flexible budgets for presentation to the production director to cover the following levels of production over a period of 3 months. So what are you going to do? It means in what we've solved, we'll have 40%, 60%, 90%. In this case now, you'll be working based on the units, 80,000 units, 100,000 units, 120,000 units, 140,000 units, 160,000 units. But first, you must apply your high and low method. The highest level of production given to you in the question is what? 160,000 units. The lowest is what? 80,000.
80,000.
Fine. So if you want to get your direct material at 100%, what will you do? What will you do?
So
It will be
160 minus
6.4 minus
600 minus 320.
6,400 minus 32 divide by what? 160 minus 80.
80. Yes. 80.
Yes. So that is how you solve it. Now you can see in this question we have issue of power, repairs, supervision, rent and insurance. These are overheads. These are overheads. So there are additional information relating to that, if I'm not mistaken. Let me see. Yes, that supervision is a step function. So this is a step cost. To this end, one supervisor is employed for all production levels up to and including 100,000 units. It means from 100,000 units, just a supervisor is employed. For units above 100,000, we have what? An assistant supervisor. And the cost of that assistant supervisor will be what? The addition of that assistant supervisor will result into what? 640. So it means where you have units above 100,000 units, the existing fixed cost that you have will be 1,140,000. Yes, because 80 is less than 100, isn't it? 80,000 units is less than 100. So 1,440,000 plus what? Plus 640.
640.
For any production that is above 100. That is above 100. Your rent and insurance and rates, you also apply in that line. You also solve in that line. But rent and insurance, there is no any story related to that for your rent and insurance. So the value of your rent and insurance will just be, you also work based on high-low method and C, rent and insurance, rent, insurance and rates, rent, insurance and rates. Let me see if there is any additional information related to that. Okay, fine. During the 3 months, July to September 2021, 100,000 units were produced. Actual costs incurred during the period were as follows. So you can see these are the actual costs incurred during the period. The actual costs incurred during the period. So let's see, you can attempt that and see. So you can attempt that to see what you can do. At least let's go and lay our hands on it and solve. I want to get feedback.
Hello,
Yes,
sir.
I'm with you,
Sir,
man.
for that supervision, should we say
Yes.
that it is an incremental fixed cost?
Very well, man.
Okay, now we are not going to use high and low for it, Abby.
No. I'm not using high and low. It's already defined.
Okay, thank you, sir. Thank you.
And so you said power and repairs are overhead production.
Power and repairs.
Then rent and insurance too.
Yes, they are overheads. They are overheads. The power and but you check the additional information B. There is a statement regarding that, regarding all those values there. You can see the power is given to you as what? 760, where you are producing 100 units, right? 760, where you are producing.
Yes, sir. This is another question entirely now.
No, it is not another question, ma. These are the
It is when we have finished solving the A, we can now come back to B.
The B has required too.
Another question.
During the 3 months of July. Okay, all right, yeah, that one is a comparison anyway. That one is using your variance, trying to determine your variance. Fine. So is in determining your variance, but still, yeah, elements in so just try and make attempts. Let's see, and we'll just discuss it in our next class. I will not solve it. I will ask you the loopholes, then you will just trash the loopholes out. So in case you are waiting for me to come and solve it, I will not come. Because some persons are always waiting for me to come and solve. Me, I don't. That is not how we are built up. You have to put effort, yes, to see what you can do. Don't wait for every time solving. It is when you solve and you cannot solve, you reach out, then I will put you through. If you're always waiting, that one will not help us. Because in the exam hall, it's you and your paper. It's not waiting for the tutor to come and solve in the hall. It's you and your paper. So because you are preparing for the exam, we need to push you to learn how to solve. So that is the concept.